obviously topped by the Fed minutes on Wednesday, confirming a lot of sort of agreement in the team that that we are looking at 50 basis points hike in June and another 50 basis point hike in July. So that sort of added to this downward movement we've seen this week for the dollar, and that's continued. We lost 1.37% last week for the dollar. This week we're looking at the moment it's possibly a 1.5% decline for the week. We'll see how all that pans out. Obviously, at the close of business today in the US session. US session is still half an hour away. Data today, key data, the PCE data, spending data in there. It's the Fed's preferred measure of inflation. Remember, inflation has been the top priority for many central banks. Even the Bank of Japan, we're talking about this morning, trying to look at core inflation around 2% over the next 12 months from Japan, and that's some move for inflation in Japan. So let me just I haven't actually shared my what do I want? I need my. Can I share my? No, I can't. Okay, let me just try and get my charts up. Will it share my screen? In fact, it won't share my screen. Why won't it share my screen? Oh, that's a shame. Can't share. It doesn't look like I'm going to be able to share my charts today. Hang on a second. I'm just working from one screen, unfortunately. Okay, never mind. Okay. All right. So we'll just have to try and play this without charts today. We've got we've got the key PCE data. So let's have a look. That's come out already. It's sort of just spinning. It's still a minute or two away. So let's have a look. Here we are. It's just coming across my screen now. So we've got a lift for personal spending. The core number has come in at 6.3%. So that's actually weaker than expected, than the 6.6% from last time and expectations. And it's not PCE is less than expected. 0.2% come from 0.9% last time. 0.4% was expected. 0.4% for income or for the month compared to 0.5%. So it's all a bit weaker. So it's adding to this argument that we've reached sort of peak inflation. Let me just try and share my screen again. Let's put some semantics to get some charts up. Window, it's not Chrome. No, it's just Chrome tab. It's sharing window, which is that one. Doesn't want to do it. Window. Share the window. Yeah, it doesn't want to do it, I don't think. So let me see. It says a euro chart. Yep, so it's not picking that window up, is it? So we might not be able to share some screen. Let me try again. Share screen, share my window. There it is. It's picked it out. Right, there we go. So let's just get rid of that. And we're hopefully we are now working. So there we go. That's a bit better. I can see that now. Right. So let me just go back to the data now a bit more with it. Phantom, we'll have a look at euro in a minute. This is the euro that's on here. See, we've bounced off the key 107 here. Let's put your question up there. So euro, you can see here, it's sort of bounced off 107 quite strongly in the last couple of hours. So we come down all day, triggering lower here earlier on, and now we've moved up here in the last couple of hours. So here at 12 o'clock, big down candle followed through the 1 o'clock candle. We bounced at 2, and here we are, 3 o'clock candle trying to move back up. Needs to break back over 107.20 if that's going to move back up today. The data, you could argue, is quite supportive of the dollar simply because we've been in this big downtrend. Let me just bring up the dollar index, the daily chart here. So we've been in this big downtrend since this peak here at 105, the middle of May here. So here we peaked here on the 13th, and we've been down ever since, haven't we? So we've had, you know, one up day here, 2, 3 up days out of the last 10, 12 days now. So here we're down here under 102, 106, 101.42 overnight. This earlier today. So we're drifting lower. Obviously, 101's the next big line under here, and then 100 itself on the higher time. So dollar sort of cooling here in the weighted charts on the dollar index. And let me get, whoops. There we go. Let me just get back to you guys. Sort of rolling over. So euros rolled over on that data. So let's have a look at what else we've got in here. Mohammed, good afternoon. Hope you're well. Imran's asking about gold. So Imran, gold, everyone's favorite, or one of everybody's favorite item to talk about. So let me just give you a quick review here on the daily chart for the gold market. We moved down quite significantly here in the middle of May, spiked intraday down to 1788 level, and then we sort of consolidated around 1815. So we'd broken back over 1800, consolidating here for 1, 2, 3, 4, 5 days. Wasn't sure what was happening. And we had a quite significant break back up, closing this big downtrend here. So if we'd been short here with this strategy, this crossing EMA strategy here, we would have gone short here on the 22nd of April. And we bought all this time here because we haven't broke back over the middle moving average. So here, that would have taken you out of that short trade here on the 19th of May, and you would have triggered long here on the 24th. So your big short bagged you lots and lots of pips. Here it's gone long on the 24th here, as we've broken back over the 21 EMA. So you've gone long here at 1866, but then we've next day we cooled immediately, and then we've been sort of hanging on to the key psychological 1850. So if 1850 holds, that's obviously quite positive, but the moving averages here, as you can see, have flattened out quite easily. So we're sort of going sideways at 1850. We need to break over this 1870 intraday high on the 24th there to push us back up. A break below here, significant break below 1850, 1850, 1840, 1835, break down, and then we move down perhaps to test 1815, and then the key cycle 1800 itself on an intraday basis, Imran, which is probably what you're more interested in. Let me have a look. I'm guessing intraday. You can see we've had a big down candle this current hour, as we've topped at 1860. We haven't been able to break over 1860. The data's probably helped the dollar as gold has come down here. So it's been long most of the day here. From the close yesterday, as we start to move up, big strong candle this morning, but that's been reversed as I speak. So 1850 is that key level. You can see your 50-hour moving average also sits above that 1850. That's 1851. So intraday we got that key support zone, but how long that will hang on for, we shall see as we move into the end of the week. Okay, so 1850s key support, having rallied quite nicely so far today. Hope that's answered your question. Lucy says, I'm scared to look at my trades. Muzi, if you're scared to look at your trades, ask yourself why. It's usually because you've got too much at risk. Okay, you've got to. It's very difficult, but you've got to be comfortable with losing. You've got to be comfortable with a losing trade, multiple losing trades, one after the other, one after the other. It really is a mindset. It's a big mind game trading, and once you get comfortable with losing, you can then move forward. Okay, just the fact you've actually written that down, Muzi, suggests to me that you are, you're okay with it. Okay, so if you lose, you lose. It's just part of trading. For instance, if this 1 hour chart here, we can see on the gold trade, this would have taken, I mean, if you'd been strictly following this strategy here, you would have gone long here yesterday. It would have stopped you out as we've reversed quite dramatically here, so flat. So you've been stopped out flat. You would have then gone long here on the following hour's trade if this was all automated, and you're still long until now. So you've been stopped out. So that would have been a losing. Well, it hasn't closed this one yet, has it? But it's looking like it's closing you out. So that would have been another losing trade. But that's just trading. That's trading this particular strategy on this particular asset on this particular time frame. So whatever your time frames are, Muzi, my friend, stick with it and get lots and lots of data at your strategy to see if it works. As I've said many, many times, and I think I put a little post up on Facebook this morning, there are hundreds, if not thousands, of strategies that work, and they work well enough. It's not the strategies, it's the application by the individual trader, and that's where things start to go wrong. People break the rules. They can't stick to their stop loss, or they get too greedy with their target, and they end up losing, basically, and blowing things. So try and stick to your rules, accept that you lose, and you'll lose more than you think you will, but let your winning trades run, as they say. So gold, Muzi, my friend, has been up today. It's down in the current hour, but I don't know what time frame you're trading it. So here on the hour, we've been long, and now it's gone short, or it's taken you out, basically. So the best of luck, my friend. Let me know what time frame you're actually trading it. Okay, $10 to $100 FX challenge. Hello, I don't know what that means, but thank you for being here. Aussie pound, Aussie dollar, Aussie pound. So we've got an Aussie trader future. Let's just have a look at the Aussie to start off with, because it's the first one I've got here. I'm not sure I've got the pound, but I'll bring it in a minute. So the Aussie itself here on the 1 hour time frame, as you can see, has been trending higher all week. Basically, there's that little from the low of earlier in the week. Here, we've been moving higher. So we breached. We've been pivoting through .71. We couldn't seem to hold it here. This is on the 23rd. We broke it here on the 25th. On Wednesday, we dipped down in to close the day. Then we reversed. We struggled with it yesterday, and we've broken through it quite aggressively today. So the 7.71 level's been is now probably a key technical, psychological support area. That big candle this morning on the Aussie retail sales being in line with expectations, but better than the feel for things with regard to the retail sector in Australia. So we've rallied 71.50 is this dot line, where it's just shy of 71.46. That actual yen is, but that's our key resistance. 71.50 remains bid here today. If we go up the time frame, 4 hours being bid from this low here on Wednesday, that still remains bid. There's that big candle from this morning, moving higher. If we zoom that in, you can see there's that 71.50 level, key level here for the 4 hour, your 4 hour traders. Next leg up really is that intraday spike here when the RBA met there back on the 3rd of May, which gives our May high. Remember also what's happening now, what's coming into play now is the end of the month. Okay, Monday the US is closed for a holiday, but Tuesday is the technical end of the month. So there'll be lots of positions being sort of squared up this weekend. The following weekend coming is a big weekend in the United Kingdom. It's the platinum Jubilee anniversary of the Queen. So UK is closed Thursday and Friday next week. So short week in London. Key reason that's important, obviously London is still the centre of the Forex market. So watch that later next week. And obviously then we roll into the new month as well. But more on that next week and more on that later. So Aussie here remains sort of bid to the upside here on the 4 hour. And we look at the daily. There's another typical dollar cross from the middle of May, the week of dollar. All the news from the Fed is now sort of priced in, you could argue, and therefore, where do we go from here? Well, 71.50 is the resistance for the Aussie, and 72.50, this intraday high here we talked about beginning of the month, on an end of day basis. Who was asking about that? Sorry. Future. Okay, so pound. Your other one was the pound and the Aussie. Let me just find a pound Aussie. I don't know if I've got it here immediately. I might have. I've got pound Kiwi. Now let's just it's got my shares. So which pound? So pound Aussie. Where's pound gone? Pound Aussie. Where's pound Aussie gone? So look, what's this telling me? Well, this is the weekly chart. A lot of consolidation between 178 and 176 still to an extent. So let's go down. Daily, again, sort of just can't get over 178 this week. And, well, I'm saying this week for all of May, really, but we don't want to get under 176. So it's a real oscillators trade here. 178.00 the top and 176 the floor of the extremes for all of May, and that doesn't look like that's breaking anytime soon here on that daily time frame. The good thing about these consolidations is the longer they go on, the bigger the breakout when it actually occurs. But don't jump the gun. If I don't know if you're trading this all the time, but as you can see here, we broke to the downside. That looked fairly confident, didn't it, here at the beginning of the month? 3 big down days. Intraday spike took us all the way to 172, but then it recovered quite quick. So the recovery was very significant because the size of that candle sort of gobbled up a lot of this movement down. It took out all of that. So, if you were doing a little Fibonacci, I don't know if you did that, but a little Fibonacci on that down leg, the low here, the intraday low here on day one was gobbled up, completely retraced to like 70-odd% of the down movement within 2 days. So we were back right into the middle of the range as well. That's the other key thing. So we're at 172.76, right in the middle of that range, and now we've just done that ever since. So buy down here, sellers at the top here, and that continues to be the case at the moment. Today we're to the downside. So I don't know what time frame you're trading this, my friend, but that's a big oscillator's dream, really, with some strong tops and a strong floor. So here, there you go on the hour. Nice downtrend. Don't get too greedy. We were still well short the the bottom of the channel there, but remember that's on a daily basis. There we are, 76. But nice old, yeah. There we go. What can I say? It's let's say follow the rules. Future, my friend. I hope that's answered your question. Where am I? Simple. Hello, Peter. Good day to you, my friend. Let me just grab a drink. Excuse me a minute. I haven't got a desk here next to me. It's on the floor. Please update me. Any updates on gold, Pete? Well, I did that earlier, Peter, but I'm happy to do that again, my friend. Don't worry about that. Gold on an intraday basis. Let's have a look at what's my defaults gone. Go charts here. This is gold on the 1 hour chart. We've had a strong update. We've had a strong update, but this current candle, this current hour, is very significantly down, isn't it? So gold has run out of steam as we've got up to 1860 up here. Here we are, up here. Let me just put that in. There we go. And again, obviously the sign there is that it just sort of stalled, didn't it? We'd had a big up leg, retrace, big up candle here, and then for 4 or 5 hours we didn't want to close over 1860. In fact, it was lower than that, wasn't it? But the buyers were trying to take it higher. No more energy at over 1860. The actually hourly candle closed quite short of that, $100.50 short of that at 1858.50. and then the big shakeout occurred here in this currently hour candle. So that's down here into its 50-hour moving average at 1851. So it's just about to the big psychological 1850. The 4-hour traders sort of ticked higher this morning, but again, it's a bit of a wave down to 50 period moving average here. Ticked up here this morning, or last night, in fact, the closing candle, the 8 o'clock candle last night, and it's just edged up into that 1860 area. It doesn't want to go higher. We're down at the moment, but the 4-hour guy is still long. The daily trader, as we said earlier, closed his big long short here on the 19th. Nice bag of pips for the end of day gold trader. He would have gone long here on the 24th, and he's still long. His stop loss is probably down. Well, initially it should be down here somewhere, but he may have moved a bit, so around here at 1820 or something, 1830. But he's still long, and it's gone sideways for 2 days basically. So don't know what time frame you trade it, my friends, but yeah, it's been positive. 860 hasn't broken, and it's come down quite aggressively in day. So it might have been a bit of a messy day for you. I don't know what you think about that, Peter. I don't know how you're trading it. Derek, crude oil. Not many people ask about oil, but thank you for that. It's a fascinating asset because it has so many things that cause it to move. Big, probably the most geopolitical of all our assets here. So US oil, remember US oil is the WTI contract, the West Texas Intermediary contract. When people talk about oil generally, they're talking about the other contract, the Brent contract, or UK oil. But overall, the trend remains to the upside. We've had a relatively positive week for the oil market. We've rotated through or found support through here at $110 a barrel. It's still, over $100 a barrel. It's still a very, very bid oil market. And then we rallied yesterday after the inventories on Wednesday. We rallied yesterday on a bit of chatter about OPEC not looking to increase production at all. So that's added to pressure. Any news that with regard either the supply side or the demand side is moving oil these days. Obviously, the Russian invasion into Ukraine has had a massive impact on the oil market as well. And then supply around the Middle East, some problems in Libya and other countries, obviously adds to pressure. And the big market of Saudi Arabia is still talking about not increasing production yet. So 115 was an attempt earlier today. We tried it yesterday. We've gone higher today. Intraday, so 115 is a big line in the sand. Doesn't really want to break over there, does it? Intraday, you can see clearly a top around here, around 114.35 is that top. So that's a clear big line in the sand on the contract there. And at the moment, it's sort of ticked down for the last couple of hours. But on the higher time frames, it remains bid, Derek, the oil market. If we go up to the, let me just take this up to the daily time frame, and you can see let's zoom this up a bit. There we are. Choppy, but we've had a bias to the upside still in May, haven't we? Very choppy April, obviously after the Russian invasion here at the end of February. Choppy sideways down for a while, then we went up, then we went down. And we've sort of biased again. It's, you see these waves here. So down, up, down, up, down, up, down a bit, and then we're sort of still. But overall, we're sort of waving higher, aren't we? These cyclical waves take us high. So there's that big yellow line here on this daily chart. Sorry, it's so messy, but it's an hourly chart here. But 115, big line in the sand. The invasion day here at the end of February took us to 124, just shy of 125. So 115 is our current May high, and that's the resistance as we move forward. So is that is the May high in already? You could argue with only 2 or 3 days of trading left to go. So rolling over potentially and down a tad today, but very much channel bound. But we had a nice leg up yesterday. So intraday traders might be playing this move from yesterday, these 2 big hourly moves. So we're still well above 50% of that big rally if you train this intraday, that's your support there. Sits at 112.75, I'd say, and the other key levels are 61 fib at 112.25. So 112.75 and 112.25 as we go into the end of the week. But remember, as I said earlier, I don't know how many of you have been here. US is closed on Monday, so there'll be a lot of tying up, potentially for not only for the end of the week, but also for the end of the month as well. Remember, the month ends on Tuesday as well, so potentially a lot of tying up for that, Derek. Well, thank you for that. Alex, good afternoon. Hope you're well, wherever you are in the world, or good evening, good morning. I don't know where you are, but hope you're well. Andre's asking, I'll teach you. Oh, Andre, go away. Oh dear, so much spam. Would you walk me through how to equip my charts with your indicator, says Derek. Derek, I can tell you what's on this particular chart. Yeah, it's obviously dark. The black background doesn't work fantastically well on when we're broadcasting. But let me just zoom this up for you. Maybe make it a bit bigger. So this is the daily time frame. Actually, let's go back to the hourly time. Let's zoom this up. That's not a great view. What we've got on here is the crossing EMA setup. Okay, it's watch all our webinars, our videos. This is one of the strategies. It's a trend following strategy. So the magenta line here, or the purple line, is the 21 EMA, the 21 exponential moving average. The yellow line is the 9-period exponential moving average, 9 EMA, and the blue line here is the 5-period EMA. So we've got 3 moving averages. That's what these 3 lines are here. And when you're trading with moving averages, you want an angle on them. When they're flat, they're not doing very much. Like we've got flat here, and they're going horizontal. So the steeper they are, the better, as long as they don't get too steep, like what happened here. We went, whoa, too steep, didn't we? Now we flattened out as we've got to that. Couldn't get to that 115 level. We smoothed out at 114.35. So they're the 3 moving averages. And the way to trade this, and the brown one, for instance, just for reference, is the 200-period moving average. So the beauty of moving averages and lots of technical analysis is it's applicable to all different time frames. So that if we move this chart from the hourly to the daily time frame, it's still the same moving averages. So instead of that being the 21-hour moving average, it's now the 21-day moving average. Okay, fairly straightforward, I guess. And same with any other time. Anyway. So the way to trade this strategy is you're looking for the slower moving averages, or the faster moving averages, I should say, to cross above the slower moving averages to suggest that the price is starting to move up. So that's what we've had back here. So here on the 25th at 9 o'clock or 10 o'clock as this candle closed, the yellow line and the blue line cross. So the 5-period has gone above the 9-period here. And also in the same hour, we've gone over the 21. So that's a buy signal there. Okay. But as you can see, nothing happened for almost a day. So you were long, but nothing happened. So you would have gone long here. Your stop loss would have been down here, strictly as the markets turn, because we've had this move down. And then you would have moved your stop loss up as the low has moved up. But as you can see here, as we've gone sideways, the low, we would have moved it up to this point here. But that's still the lowest of all these candles, isn't it, really? Even at this point, we count back, say 5 candles, 1, 2, 3, 4, 5. We might have moved our stop loss up to here. I'd have had it still down here somewhere. Anyway, that's because it's not trending, is it? They haven't moved. Then all of a sudden, this big candle happens, but we've already long from back here. In fact, we would have stopped out there and gone back here. But anyway, it's a technical issue, but we've still been long here, and then we'd have captured all of that move up, and we might have waited like we have here, but that would have, that candle there would have taken us out because it's gone below the 9-period EMA. What the whole webinar of an hour and 90 minutes explaining this particular strategy, it's very, very straightforward. These other indicators on here are just something that's always on the charts. I like the MACD, I like RSI, and I like ATR. But again, there's whole webinars, hour-long webinars explaining how these indicators work, the pros and cons of these indicators, and combining them together So more on that in June as well. We've got lots of technical webinars in June, guys, if you want to know more about how these indicators are all set up. So there's the main indicators, Derek. It's the 9, 5, and the 21 EMA, the moving averages, and then there's the MACD at a default setting at 12, 9, and 6. I think it's a default setting, isn't it? Yes, 12, 26, and 9, I should say. What I'm talking about. And the ATR, the average true range, also set for default of 14, and the RSI 14. But for this particular strategy, it's just the moving averages at work. You can use the ATR to generate targets as well if you're not going to use the moving average to generate your targets and your stop loss. But I say more on that. Watch the webinars and we explain how you trade with that particular setup. Okay. What's the next intraday support? What for the oil market? Well, again, you could just add some. I haven't got pivot points on here, but lots of people trade off the pivot points, the daily pivot points. That's a nice, very simple way of using support and resistance. So you just add your pivot points from your MT4 platform. But let me have a look. So saying, what's the next intraday resistance? Well, in the oil market, I always go back to the lines that Rory got. There's a line on here at 12.56 for a reason. I don't know why it's on there at the moment, but there will be a reason why that's on there. So for me, at the moment, I would say the next resistance sits at 12.56. Coincidentally, Derek, it also, you can see it's halfway between these two technical 50 and 61.8 Fibonacci levels or retracement levels of this big leg up we had yesterday. So again, that sort of fits with the psychology. So the big support zone, this support zone here, as I mentioned earlier, 12.75 and 12.25, but I've also got a line here at 12.57. So that's a support zone. I'd say if that breaks, we could go back down to test this 200-hour average. This holds, if we'll break potentially and perhaps even test this 1430 area, which is a clear resistance intraday, 1430, and then potentially 1500 itself if there's data come out to move. There's not a lot of data left to come today. We've got the University of Michigan investigation sentiment and expectations for consumers as well, and then the end of the COP reports for the Forex futures market as well later on in the session. Where was I? Let me go. Who was next? Sorry. Faisal. What will be expected to market this coming days? So, well, today a lot of the data is out already, Faisal. It's been a busy week. It's been a very important week. We're talking about a weekly wrap up here. It's been a very significant week. The major news of the week was obviously the Fed minutes on Wednesday night, where they confirmed. Basically, the minutes confirmed that the board, the committee, were as one, really, as unison. So the Hawks have won the day. Next two rate hikes will be 50 basis points in June and 50 basis points in July. So a whole percentage hike for interest rates for the United States, at least. Remember, the GDP number that came out yesterday, the second most important data point of the week, it was the second revision of first quarter GDP, and it's actually worse than the first one. The first one came out at a contraction of 1.3% for the first quarter. The data yesterday showed the revision had moved it down to 1.5% of a contraction. That was significant simply because it was worse than expected. Things were expected to tick up a bit to 1.4 from 1.3, so it actually got worse. So that freaked things out. That added more pressure to the dollar, but it let the stock markets have a bit of a rally again yesterday. So stock markets moved up quite significantly yesterday on that news. The other key news yesterday was pending home sales were much worse than expected as well. So there's a lot of analysts and economists have been talking about the bubble in the housing market in the United States as people come out of the pandemic, they come out of the big lockdown. People are retiring early. They're not going back to offices. They're moving out of the cities. They're moving to downgrading their homes and housing and looking for new houses in different suburbs, different cities. Obviously, some of the issues of that is the older generation tend to be quite well paid. They tend to be, good tax payers, and so that's good revenue for the government. So that's starting to disappear, and people just aren't coming back to the market. So that's why we've still got this very, very, very tight jobs market. Again, we saw that in the UK as well yesterday. So the US yesterday also showed that only 220,000 new initial jobs claims were announced on Wednesday. So again, that's very, very low. It's below the normal economic cycle average. So it shows that people haven't come back. So this great resignation, or this great people leaving the paid employment, is quite significant. So it's a big grasp for developed, well, all economies, not just the developed economies. If your tax grab, if you like, or your tax dollars or euros coming in is less than it has been before the pandemic, how are they going to move out of this pandemic as inflation starts to rise? So obviously, with less people in working, they're generating less tax, but it puts pressure on wages because companies are trying to recruit the best people. They're having to put wages up to attract the best people. So it's a big conundrum, and that's where we're moving forward. So therefore, the central banks have acted fiscally from a monetary point of view, to move interest rates up. Many are saying they've moved too slowly, and they're overreacting. That's going to slow things down. So if unemployment starts rising, that could have the twin problem of stagflation, with high inflation, high unemployment, and low growth. So I wouldn't, decision makers, policy makers, in a bit of a bind at the moment. The UK Chancellor yesterday threw an awful lot of money trying to support the squeezed workers in the United Kingdom, as well as those unemployed as well. So big issues over the next 6 months, certainly to a year. But certainly for next week, Faisal, the key thing is we move into the end of the month. We've got non-farm payroll next Friday, so a new month starts. June heralds the final month of the second quarter, so we'll be halfway through the year already. So lots going on. It's been PMI week this week, and I say inflation as well. That with that PCE data early on today, showing it's cooled a tad. That PCE data was on the cool end of things, so that's why the dollar may have ticked up, having been under pressure most of the week. So next week, another key week, as most weeks tend to be. But it's because it's the beginning of the month again, so going to get a bit of a lift. Okay. Mohammed, well said. About what? I say a lot, don't I? I don't know what you say, but anyway. Nash is asking about silver, something I haven't looked at for a long time. Silver market. Last time it was it diverged from the move in the gold market. Last time I looked at silver. Let's have a look. Where are we? Come on, let's have a look under here. So silver, there we go. What a lovely trend that's been. I hope you cut a lot of that trend. So again, Derek, I don't know if you're still here, but there's a classic trend following strategy. So here that would have gone short here on the 21st of April, and it's gone, and we would have been out here on the 19th of May. Could you have held it all that time? You would have made an awful lot of pips, an awful lot of cash, an awful lot of money if you'd kept with that trend moving down, 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 down. Just attempted the 9 period there, didn't it? And it was finally out there. So what's happening here, interestingly, is we've been big downtrend from this high at $26 all the way down to 2050, below 2050. We would have got out here at 21.85. It's looking to go long now, although see how the big downtrend, the candles, not huge ones, but bigger as we've moved down to this reverse. So we're moving up. That's looking relatively positive at the moment, and a potential long trade here on the close of today for an end of day traders. The RSI here, you see, is rising out of an overbought area. It's at 48. It's still It's still neutral, but it's trending higher, isn't it? It's moving up a bit here. This sort of fits in with the rally in the price here. MACD is still under zero line. Histograms are getting short. The signal line here is starting to turn up. There's a bit of a turn up here. So a close over here tonight would be a trigger to go long on this using this strategy. But on the caveats is it's a small candle. It's not a big candle at the moment, but if we close around 22.30, that should be positive enough to for this system or this particular strategy to trigger long. And then, as there's no fresh air, the first target will be $23. The ATR, which measures the average true range, that's what it stands for, says the average daily move over the last 14 days, 60 cents here. Okay, so you'd expect at least a 60 cents, $1.20, so 2 times the daily ATR to be sort of target. So if you got in here at 22.30, you might be looking for 23.60 somewhere up here as your target, and then stop loss down here. Well, really, it should be down here where the market's turned, but that's a big loss. You'd probably down there would be a stop loss 5 candles behind. 1, 2, 3, 4, 5 would take you here. I'd push it down there, 21.33, and then see what your lot size gives you for a risk reward ratio 1 to 2 to take it up to here somewhere on that. Obviously, it depends what happens tonight. But yes, we've had a big move down in silver over April and most of May. Middle of May, we turned around and started to eke up. We closed our short here on the 19th, and it's looking to go long today on an end of day basis. Nash, I don't know how you're trading this, if you trade it intraday or on an end of day basis, but certainly the lower time frame charts will be relatively positive as well. So let's have a look at that. So that's the daily. The 4 hour. Let's move back. Can't see that, can we? 4 hour, and that's triggered. That was triggered quite nicely there over 22. It's gone long at that point. Haven't gone short there. It closed out. So that was a losing trade, but that's been long since there, hasn't it? Using this strategy there on the 4 hour. So 4 hour traders would have gone long here. When was that? That was yesterday, around about 8 o'clock on the close of that candle. So we've gone long there, and that's running quite nice. The ATR there is 17, so 34 on top of that is 22. 22. So that would have at least hit your 2 to 1 already. Would have been around about here, the target 21, 22 something. Yeah, but that's still long. Lay long, and 4 hour traders are moving up, and 1 hour traders also triggering. Well, went short, a bit messy. That's a nice strong candle there. You'd have got in 1 hour, would have got in earlier here, reversing the short position here. So that's kept you in. That's kept you in as well. So we didn't break under the 8. So yeah, so 1 hour traders again, they would have gone long at 5 o'clock or 6 o'clock yesterday when that candle closed down here at 21.92 again, same as the 4 hour trader, just above there. And he's been long ever since. He's just trailed that trend up. So Nash, I say, I don't know what time frame you're trading that, my friend, but that's still going long. There may be some profit taking into the end of the week. We've had a spike to 22.41 by the looks of things in the last hour. So that may be, the last of the buyers up here at 22.40 or 22.30. It doesn't look like it wants to go, but we've bounced back, haven't we? Sort of trying to shake out people, but that still remains relatively positive. See how the moving averages are. Derek, I hope you're still here, but you can see this is a classic sort of trend following strategy where we've got the 21, the 9, and the 5 all nicely aligned and are all sort of going up. The angle isn't too steep, but it's nice trending higher. The MACD signal line up there moving higher. RSI here at 69, still rising, but it's touching, it's bouncing into that technical overbought area, but it's still rising. So don't panic, it's still holding up. Trail your stop loss up. And silver remains long there on that 4-1 and daily time frame. I'd say from what I can see there, technically. Nash, my friend. Derek, good. Yeah, I hope that made sense. See how the moving averages again, see, nicely aligned. That's a trend following strategy, but it obviously only works when markets are going in a trend. So let me just see if I've got any more Facebook. Any questions from Facebook? I don't think I have. My friend Andrew would have let me know. Right. Don't think so. So there we go. Any more questions? No. Right, I've been here nearly an hour now, guys. I'm going to wrap up if you don't mind. My voice is going. Unless there's any more questions. So let's do a quick review of where we are with the market. So let's go back to the majors. So the data today, let's bring in my default. So the data today as would add to the argument that inflation has topped out or has shown its peak. The PCE data was weaker than expected. And where are we? Well, the euro here having dollar index here having touched 101.43 earlier this morning as the markets opened for today, confirming this sort of the downtrend we've been in. Rallied for most of the day, and now it's just looking like that's taken out that. There we go. That's long position as a weak rally. So intraday. If we take to the daily time frame, you see we're still held up. So anything over 100 is still a strong dollar. No question about that. But 102 is that now our resistance to the upside, having been support as we came down quite aggressively. We've gone sideways all this week. So 101.43 is our low for the week, and it happens to have been plotted today. So again, the trend remains to the downside of the dollar. Currently, we're still obviously the session in the US is still not yet open, and a lot could change with that, but there's not a great deal of data to move that. So 102 is the resistance, 101.43 is the support area, and we're right in the middle of that at the moment, but bias to the upside, 101.75. Euro doesn't want to go under 107 today. We've rallied to 107.75, and then we've come down 75 pip intraday move on euro. That's a nice move intraday for the euro. 107 is our support going into next week. Whoops, there we are. So again, nice rally from the middle of May for euro dollar. We capped here 107.5 again today. You can see that 4-day, this weekly high. But again, remains bid over the 20-day moving average, which sits at 106.30. So 106.30 is key support next week on an end-of-day basis for the euro. Sterling, another choppy week, but really biased to the upside for the weaker dollar. You can see this 125 is that key line, big yellow line here. That's 125. That's key. 125.50 we're over, and even 126 we went over today. Played with it yesterday, closed right on it yesterday. We've pushed it as high as 126.60 today, but we've come back down on that. So 126 is our support. 125.50 going into next week on an end of day basis. Again, it's the weak story of the dollar as the major peers start to move up against it, as the worry about inflation and the action from the central bank, particularly obviously the Fed, as far as the dollar's concerned, is all now getting priced in. So the issue is, reason why the dollar's come back a bit today is that the inflation pressure perhaps isn't as strong. Perhaps we have peaked out, so that therefore the Fed don't need to be any more aggressive than they've already telegraphed they're going to be over the summer. So it's going to be really what happens in that final quarter of the year now. So the summer, at least 100 basis points coming. Looks like it's not going to be any more than that at the moment. Depends how the jobs numbers go. And then what happens from September through to the end of the year as well. So cable 126 currently support. Yen still sort of idling around this week through 127. So 127 is our pivot point. 128's been the resistance this week, and 126.50's been our support this week. So the three big round numbers again for yen next week. Aussie has been in play. We're back over 70. This is the daily. We have been over there for a while. If we go to the resistance now, it's 171, but that was only to sorry, dot 71 today. So dot 71.50 is resistance, but again another one's tilted higher. Kiwi's been very much in play, very aggressive, hawkish. Reserve Bank of New Zealand on Wednesday morning, talking about a 4% cycle high. We've gone to 2% already, but then Mr. Orr sort of tailed that back today in an interview with Bloomberg. So Aussie again bid against the dollar, like many of its crosses have said before. So we're over 6.65 from the support at 64.50 earlier in the week. The big rally here when the RBNZ announced on Wednesday, and we're above that high, interestingly. So on the comments from retraced, but then we're above that high of the actual announcement at 65.15, and that's where we are. So again, bid Kiwi dollar, and we're pushing weekly highs here at 65.30 today. So again, another strong pair currency against the dollar. Swissy has been, very strong, although really aggressively in May. It's really great trending one here. So we ran this low here at the beginning of April, all the way to parity at 1.0 and above it, but we couldn't hold it again. This is many times very similar story with the Swiss franc. You can clearly see some sort of intervention from the Swiss National Bank here. We got too high, but we're under all the way down to 97.97, 95.75 we trade at the moment. So that just keeps weakening dollar against Swiss franc there. So there we go. Gold, as I said earlier, 1850. If we can hold, that's be a strong close to the week. 1850 is all the way down here. So we're currently trading 1860. So moving up as the US market opens. And stock markets. Nobody's asked about stocks today. Significant potential move yesterday. This is the daily on the USA 30. I'd argue it's still only a bear market bounce or a bear market rally. But yesterday we closed right on the 21-day EMA. So this strategy is still short, but that closed out the last short here as we moved up. And we closed above 4,000 yesterday for the first time in many days. So that was 1, 2, 3, 4, 5, 6 days off. First time in 6 days we were over 4,000 for the S&P 500. Strong start so far today. 4,100 would be the line in the sand. We currently trade at 4,080. We did have a big up day yesterday on the back of the discount retailers, Dollar Tree and other discount. Macy's was another one that had a really, really strong day yesterday. Let me just leave you with that. So I'm going to leave you with the S&P 500 unless there's any more questions. Now there's nobody else here. So I'm going to wrap it up for today. So take care, everyone. Have a safe weekend, and we'll see you all next week. All the best. Take care. Bye-bye.